Good morning, everybody, and thank you for waiting. Welcome to the first of the Quantuma weekly webinars, which will be typically hosted at 9:30 every Friday morning, where we will draw some of our expert directors and partners to join with us to give us some insight from the work that they're doing. So thank you to all attendees. We've got a huge crowd this morning. We're very grateful for that. I guess faced with the ever-evolving economic landscape that we're looking at, our experts have been speaking to a variety of different businesses with regard to how they are coping with COVID-19. As I say, every Friday we'll be hosting a webinar discussing the latest topics, challenges and issues in the market, whilst also sharing some case studies of our advisory work. This is important. I guess this demonstrates to you that this is the real life stuff that we're looking at. It's not theoretical, it's practical stuff that we're doing. Some of our webinars will also focus on specific topics where we see the need and dedicate a session to that. For example, next week's webinar will focus on the topic of business valuations, which clearly is a challenging space at this time. If you'd like to register for that, there will be lots of links on social media. There'll be details at the end of this presentation, and there'll be access on our website as well. But before we kick off, there are just a couple of housekeeping things, if I may, please. For the attendees, because of the number of attendees that we have, we are asking you to submit your questions on the Q&A panel, which you'll find at the bottom of your screen. So just tap on that panel and load up your questions, and I will address those directly to Louise and Philippa. Following this, in the early part of next week, Quantuma will issue a survey. We'd be really grateful if you could fill that survey in for us, please, because it helps us to improve the quality of the webinar and also to identify the key subject matters that you may be looking for. It is important to say that this webinar is being recorded, and all our presenters are aware of that. And that recording will be available on our website at the early stages of next week for you to access, or if you wish to refer to any of your colleagues or clients, please feel free to do so. I would also stress that what you hear today is not formal advice. If you are seeking formal advice, please feel free to contact any of our officers or partners, and all of those contact details are available to you at quantuma.com. So let me introduce the speakers to you today. We have two experts in the field. First up will be Louise Durkan, who is the restructuring advisory partner at Quantuma. Louise is based in our Bristol office and has over 20 years experience of working with a wide range of clients, including multinational corporates, private equity, mid-market owner-managed businesses, and charities. Louise will then hand over to Philippa Robinson, who is director in our corporate finance team. Philippa is based in Southampton, a corporate finance specialist with significant experience of working with small to medium-sized enterprises as their trusted advisor. She has worked on a large variety of transactions and is well respected amongst a wide and loyal network, as you can imagine. In this webinar, Louise and Philippa will talk about the key issues that we are facing today, the importance of stabilization, crisis management, cash flow, and all of the critical factors that directors, managers, and advisors are facing. That's all from me till we get to the question side. I'd like to hand over to Louise.
Thank you, Paul. Good morning, everybody, and thanks for joining us this morning. As Paul said, we're going to talk through some actual case studies based on advice that we've been giving to clients over the past few weeks. We will be talking through the key areas that we've been addressing with them and giving you some examples of things that businesses are coming to us and the key questions that they're having to answer themselves. I suppose I'd start this session off by saying, whilst we're going to get into a lot of business related questions and decision making, the underlying issues here, as we all appreciate, there's a lot of human empathy going on in terms of people that are facing illness, people that are facing restrictions and lockdown. So a lot of the advice and the things that we're dealing with here are very, very personal issues as well as very business related issues. And at the heart of all of this are the people that sit within the businesses, both the owners and the employees. So that in itself as a backdrop is quite different to what we normally face in our marketplace. So I guess we sort of start with thinking, well, We've had this experience of the lockdown for the last few weeks. We are told we're going to have another 3 weeks at least that we're going to be subject to. And how has that, what's that translated into the business thinking and what people have done as a direct reaction to that news? Some were anticipating it, some were preparing for it, and some were ready to respond, but not everybody. And broadly, what we're going to cover off is sort of the 4 key areas that we've addressed on this particular slide, which is looking around crisis management, cash and funding, which is key to everything that everybody's doing at the moment, the stakeholder management piece as well, and also come on to the exit strategy and how you come out of this at the end. We're just going to talk that through in the context of some case studies. You'll appreciate these are ongoing and live engagements, so there's limited information we can share with you, but there's certainly useful pieces of knowledge that are coming out of these discussions and these particular assignments. So if we move on to the next slide. Thank you. So what are we seeing in terms of the businesses that we're talking to, and what are the sort of the key factors? And I guess we kind of break it down into 3 types of situations that are fairly common. We are seeing businesses that are critically impacted by the restrictions and by the implications of the restrictions on their business, but were fundamentally sound businesses before all of this happened. We're also seeing businesses that perhaps were already experiencing some level of decline, some signs of distress within the business, but again are now critically impacted by the restrictions that are imposed upon them. And of course, in amongst all of that, there will remain a number of businesses that were asset rich, were in a good position, in a strong position, and may have a better, more positive outlook on the opportunities that they see coming out of this, and how they fit into the equation. Some of the sectors that we've seen won't come as a surprise, I don't think, to many of you. So we are seeing businesses within the leisure industry, within the beauty and cosmetic services, supplies into retailers, and also events and catering businesses, and some of the more sort of, I guess, classic businesses within the manufacturing sector that we're probably all quite familiar with. And I suppose I'd start by talking through what are the majority that we're seeing. We are certainly seeing far more that are coming through that were fundamentally sound businesses, but are critically impacted at this moment in time. And one of the examples that I will talk through is an example that I've sort of set out on this particular slide. This is a 10 million turnover business with a strong order book and projecting growth over the next 5 years. It has mainly an asset base of property. It has a current lending facility with a clearing bank, and it has around about 350, sometimes 400 employees. They do use people on 0 hours contracts as well. And I'm just going to talk through some of the situations that we've been dealing with and how we've been helping the clients that sit in that particular category. And also we'll touch upon some that have the signs of distress as well as we move forward. If we move on to the next slide. So how do we begin the majority of these assignments, and what have we been looking at? Clearly, a crisis management plan is a vital component part of the advice and the organisation way of approaching the problem. And some of the businesses that we speak to may have departments and department heads and directors that are responsible for all of the different areas that I've highlighted here. Some may be covering off every single one themselves in some of the smaller businesses that we advise. But having a plan in place and understanding the different areas that you need to consider, taking note of the actions that you need to follow in each of those key areas, and revisiting those plans on a regular basis has been the sort of the underlying part of the process. Ensuring that you've got somebody assigned to each of those areas, if you have the luxury of having somebody in the business to help you, has been helpful. Knowing who's doing what and when, and clearly keeping in regular touch with everybody that's taking part in this particular crisis management section has been a challenge. Obviously, we've all now got quite used to virtual meetings, We have clients that are having to get used to virtual board meetings, some being held on a far more regular basis than they would normally hold them. And of course, over the duration of the past few weeks, and even over the course of 24 hours, the order of priorities that businesses are looking at will change inevitably from day to day or hour to hour. So having that plan in place, making sure that you are sticking to that plan. If priorities change, sometimes you just got to go with it, but keep revisiting that plan. And also, quite importantly, that might be your plan A, but do you have a plan B if some of the things within that don't pan out as you expect them to? So one of the first activities is to ensure if they don't have a plan, we get one and we get it set up properly and move forward on that basis. If we move on to the next slide. So once you know who's doing what are we then talking about? Obviously, cash and funding for every single business right now is absolutely critical. It is the underlying decision-making process that will follow the cash. We know that many businesses would, in an ideal world, have a cash flow that they are working to. If they don't have one, they need one. And typically we would expect there to be at least a 13-week cash flow in place as a minimum. But as Philippa will come on to in a little while, you need to be thinking of extending that forward, and you need to be thinking particularly about the end of whatever period of time we're going to be faced with, and how strong that cash flow is towards the latter part of the forecast period as well. And then, of course, what we're asking clients to do is revisit their cash flow, taking into account the changes that they are anticipating or already experiencing in some cases in relation to the income, looking to see what is the direct impact. Some businesses have seen their income completely fall off overnight. Others will see a smaller and steady stream of income. But quite often, particularly those ones that are critically impacted, income is simply just gone. So what are the other ways that you can sort of address that income line? It is looking at the support that's available out there, and also what other efficiencies you might be able to find that you can add back into the top line. The impact on expenditure, I think we can all appreciate, is quite significant as well. We have got, and we'll talk a little bit about the ability within the payroll line to look at furloughing of employees. Yes, there are some issues around the timing of the payroll and how quickly everybody will access the scheme and get the payments in time. And I think everybody's anticipating that whilst that scheme opens in the next couple of days, payroll and payroll date for April is fast looming. Will people have the cash available to make that payroll payment in April? And that's the first question that most businesses are asking. Can they actually do that? We've covered off sort of a number of other key areas of expenditure on this particular side. A lot of things on that list won't come as a surprise, but looking at the consequences of whatever level of trading you have and how much that expenditure can be brought down and addressed in the context of the restricted trading period that you're looking at. Particularly important within that is looking at your existing lending, your existing loans, and the facilities that you have in place to understand what else can be done within those by going back to your lender and looking for some additional support within that, even if you're not considering necessarily some specific funding requirements, but are there some other things that you can deal with on that particular aspect? And if we move on to the next slide. So looking just specifically at the income available and what has been the common things that businesses are contemplating and looking at, and certainly very keen to understand in more detail. I guess for most businesses, particularly the ones that we've been speaking to of late, some are able to benefit from the business rates relief. In a number of the ones that I've dealt with lately, they may have more than one property, and some may qualify and some may not, but certainly they have managed to navigate their way through that particular part of it. It's relatively straightforward. They feel that they understand how that system works, and to an extent, we are content to leave them to get on with it, I suppose. But I would say that what we've been ensuring that clients are doing are following up on it to the extent they can. We know that some local authorities have been quicker off the mark than others to get their scheme open and running, and so slowly we're starting to see the applications are going through, and certainly within my local area, within Gloucestershire, a number of the local authorities are already up and running and actually making payments out on those schemes. And I know that pattern varies across the country, but certainly the clients that I'm dealing with in my location are finding some early traction. Then the other areas that they are immediately looking into quite naturally will have been the job retention scheme. Most of the businesses will have furloughed some people. They are constantly asking the question around when the scheme will be available, when will it be open, how quickly will I get my cash? And the one thing I would say is that the government website with this information on it is constantly being revised and updated, and additional information has been put on there. If you need to go in and look at it, there is a lot of detail now on the information that you need to submit the claims next week, and how you'll input information for those businesses that have employees of more than 100 people. So they have put all the information out there. I suspect what we're going to see is a huge volume of people waiting the moment that scheme opens up on the 20th, starting to input their data into it. How quickly will that cash flow through? In theory, as we understand it, it should take 5 or 6 days from the time that you submit your claim to see those monies coming through. For businesses, therefore, that are looking at paying payroll on the 30th of April, in theory, it suggests that they should have that money in time. But one of the things that we have been discussing is what happens if that money doesn't arrive in time? What do you do? Now, most will have, probably under some guidance from employment lawyers, produced documentation to go out to every individual to notify them that they're being put onto the furlough scheme. And quite importantly, they are expected to get confirmation back from the employee that they consent to that change in their contract of employment before they make the application. So I think there's probably going to be some scrabbling around this week and in the last few days before the scheme opens to make sure that everybody has those consents back from employees before they submit their claims within the scheme. So I think it's quite important that businesses understand it's not just simply sit down and start entering things up. You need to make sure you followed the correct process in doing that. So the other areas that I think have been picked up quite quickly and people seem to be getting on with are going back to their existing lender, talking to them around mortgage repayment holidays, capital repayment holidays, and also in light of what their cash might be suggesting, looking to see whether there is additional funding that they require. The one client that I've been dealing with, which I referenced with a major clearing bank, whilst they knew that there was some requirement for funding, I think they were just finding it slightly difficult to sort of just open up the conversation with the lender, to start talking about what they needed. This is a business that hasn't needed much more than an overdraft facility up until this point in time. So the idea of actually extending that facility and going back specifically for a loan that's effectively a working capital loan was a little bit unusual for them. And to articulate the work that they'd undertaken on the cash flow was a particular area of need for them, just to highlight and explain, I suppose, and talk through their thinking of what they'd done, so that once presented to the lender, they weren't necessarily going to find themselves in a situation where the lender was picking holes in the work and the analysis that had happened on the cash flow. So they could very clearly show them what the last cash flow had looked like before all of this went on, what changes they'd made, what was the implications for them in terms of the cash, and highlighting the things that they'd thought about that perhaps didn't work, and also whatever sort of contingencies they put into that cash flow, explaining the rationale behind that. That meant that once we actually sat down and had the conversation with the lender, it was a much easier discussion because they'd had that information in advance. They'd seen that the business had taken it seriously. They thought the right way around the cash and the implications. And it was a much more productive conversation as a result. what I would say is that that was a conversation that probably happened about 10 days ago, so maybe a week into the lockdown process. At that point in time, the relationship manager was very open and honest. They were overwhelmed. They had a high volume of people coming to them and asking for support. They were dealing with them as quickly as they could, but however, there was a logjam in the system, which I think we can all relate to. There was some interesting reaction on the call in itself, insofar as relationship managers were clearly able to trigger certain requests simply off the back of a telephone conversation. Certainly the mortgage payment holiday request was something they were able to deal with instantly. They recognised it, and that simply was something that was just a given, and they sort of started that process there and then. When we were talking about the funding and the requirement of the funding for that particular business, yes, we had the, I guess, standard answer coming back to us that initially you'd be looked at on a business as usual basis. And on that basis, there was a sort of a degree of expectation that any lending wouldn't be an issue. But clearly the application had to be made on that basis initially. And yes, ultimately, if for whatever reason they didn't qualify, the CBILS approach might be something that they have to consider. So we find ourselves probably, I don't know, just over, well, not quite a month in since all of the sort of implications started arising. And I know that the CBILS scheme was open on the 23rd of March. We have not formally had an answer back from the bank around the business as usual approach, but we are being told, or there are strong hints, that a CBIL application is going to be required. And as we expect, a second round of application forms are going to be required. So the issue for businesses have been, they have to go down this route. They have to fill in the whole heap of application and information and the supporting documentation for the business as usual approach, but they're going to have to repeat a lot of that and all that form filling in particular for the CBILS applications they're having to make. And some are better prepared for that than others, particularly in terms of the additional documentation and the supporting evidence around cash flows and forecasts. So I guess for the clients that we've been involved with, we knew that that was likely. We've prepared all the documentation in advance. Yes, there's form filling to do, but all the supplementary information they have ready. So in theory, that process can begin the moment we have the answer back from the bank. The one that I'm dealing with at the moment, we will expect that CBIL application to go in probably today at some point in time. So we don't yet have an answer on what's coming back. But it is clearly moved from a business as usual approach to a CBIL application. The other sort of interesting points, I guess, coming out of that, I know that it will vary from lender to lender, but relationship managers are being given some very clear guidelines on what they can and can't do, and they are trying to work to those guidelines as quickly as they can. I think they're finding that where you would ordinarily want to have, not now, but a face-to-face, so a virtual meeting to discuss these things, those calls are very, very short. They probably can spare 15 or 20 minutes because of the volume of people that they're talking to. So being prepared for those calls and have the information there and sending what you can in advance of that conversation has really helped to speed up those discussions as well with the lenders. So I think we can move on to the next slide. This has probably been the one area of focus that, as with many businesses, a communication plan, I think, is something that not everybody has in their back pocket. Many businesses obviously correspond and deal with stakeholders to a varying degree at different times, and some find it easier than others. But one of the things that we appreciate from, I guess, from our side of advising businesses is that communication is absolutely vital with your stakeholders, particularly at this point in time. We know that, you know, on this occasion, that it's not this business alone that is suffering. It is not just their employees, it's their suppliers, it's their funders, it's pretty much everybody that's affected. So when you are opening up these conversations, it's not going to come as a surprise that you're having issues and you need to talk to people. but understanding the message that you want to get out there is pretty important. Understanding that people are looking, particularly the employees within the business, they're looking to have some clarity, to have some questions answered. So thinking through those communications are important, and understanding the frequency of them, some more frequent than others, is pretty evident as days go by. So the ones that we are talking to, I think they're certainly having direct dialogue with lenders on a frequent basis. They are talking to landlords as and where they need to. Some of the reaction from landlords has not been great. Some landlords are taking time to respond and come back with what help and support they can give. But certainly opening up that dialogue hasn't resulted in anything dramatic at this point, which is good. The points that I think Philippa will come on to is sort of the communications with the shareholder and investor group is particularly important, and understanding their expectations and needs and their views of the business moving forward. They may vary from business to business. Have you got all stakeholders aligned, I think is something that Philippa is going to talk about. But we know that ensuring that you're doing this, reflecting back on your plan, keeping those communications ongoing and discussing on a regular basis the needs and the changing needs of the business, it is just going to be part and parcel of everyday life at the moment. And the one area that, when we'll come on to talking about exit strategy a little bit later, is customers. The businesses that I'm talking to, they are very fortunate. They have a very strong and loyal customer base. The customers understand and appreciate the situation that they're in and are trying to be as flexible and work with the business if they're having to rebook events, if they are having to have conversations around changes to events and cancellations in particular. Everybody understands and appreciates it, but to have a clear message and know how far you can go and how much leeway you can have with your customers is going to be important, because if you don't have your customers there when the business starts again, you have no business to get open and running. So that's pretty much most of what I wanted to go through. I'm going to stop and hand over to Philippa to carry on with the same thought process.
Thank you, Louise, and good morning to everybody. So I think Louise has talked a lot about how businesses have reacted, how they've stabilised, hunkered down, made changes so that they can survive. I think the thing they need to start thinking about now, and I think lots of people are thinking about this now as we move into this next phase of acceptance, if you like, of what's happened, people are wondering what should they do next. And there's not going to have been much point in making all these plans to survive if we can't emerge at the end. And I'm a bit of a born optimist, maybe naive might be a better word, but I think maybe we could use this as an opportunity. Maybe we could emerge as a better organisation. So I'm very keen to help my clients think about, you know, what they can do to come out of this as a better, leaner, more profitable business. So, Louise mentioned the crisis plan. So I think what people need to do now is take this crisis plan and turn it more into a plan of what they're going to do next. So build on the crisis plan, turn it into a business plan, build some forecasts. Now, I've always dealt with small and medium-sized businesses, and the reality is that many of them do not have proper financial forecasts. So I think this is a really good time for people to spend some time. We can help them and build a forecast that reflects their plan. I also think this is another good time to think about who does what within your team. So do people know what they're supposed to be doing? Has everybody got the right role? You know, this is just a great chance to reflect on everything that's happening in your business, to try and make sure you're really well placed to come out of the other end. So Louise was just saying about shareholders. So many businesses have different groups of shareholders. So it could be a small business with 2 shareholders, 50-50. Over the years, they've decided that they both want different things. This could be a really good time for them to actually sit down and have a frank conversation and decide, you know, does one of them want to get out? Or are they both going to decide that they're going to go forward together? And I think those sorts of conversations are very useful to help you focus your plan on where you're going to go. And then the other thing I saw the other day, which I thought was really quite interesting, was a piece of work from a turnaround investor, actually, who was saying that when you grow your business, it kind of develops, doesn't it? Things happen, you get new customers, staff arrive, and you end up with an entity after, say, 5 or 10 years that's just there, working, operating. Now might be a good chance to think, oh, if I did that again, what would it look like? So, you know, do we need different processes? Maybe we could move people around. That person would be better at doing this. And also, I think this use of technology, for example, we now find that we can work at home and save 2 hours driving backwards and forwards from the office every day. So all those sorts of things I think are really important to think about so that we can make sure we've got a really exciting, lean business to go forward with. Can we have the next slide? The other thing that people are quite interested, I think, is what are the challenges that other people are facing? So over the last few weeks, obviously, I've been talking to many, many people, investors, debt funders, asset-backed lenders, business owners, and they've all got lots of different challenges. But I think the main thing that everybody's really concerned about is that they don't know what they're dealing with. So we don't know how long we're going to be in this lockdown. We don't really know what the landscape's going to look like when we come out at the other side. Are your suppliers still going to be there? Will you still have the same customers? Are your staff still going to have the same ideals and things that they were important to them before? So all these sorts of things are things that we're really going to need to think about when we're going forward. As Louise was saying, people are worried about when the cash is going to arrive. I think she's covered that in enough detail. I hear a lot of people saying that big businesses aren't paying their suppliers, which means that they in turn can't pay their suppliers. So the smaller businesses right at the bottom are the ones who are really struggling and need the money the most. Another problem that people are facing is if their own bank isn't in the Sybil's loan scheme. So there's not much chance that you could swap to a new bank for one of those. I think as time goes on, more banks are joining that. So if you didn't think your bank was to start with, it's worth revisiting and asking them, are they joining? The other problem, of course, is in some countries, the government help has been 100% backed. So the banks end up being a distribution centre, if you like, for the money that comes out. That's not the same in this country. So the banks still take a risk on their lending. So as Louise was saying, you still need proper numbers, you need a plan, you need a flexed plan that you can show to your bank. Private equity funds have been telling me that they've applied for Sybil's, but actually they're not going to be acceptable. And some of those have invested into businesses from what's now closed funds. So they've got no more money to put into those businesses. Other people maybe didn't have any debt in their business before, they need a lender, they've got no idea where to go. And some lenders are telling me that they can't actually do any more lending because they can't do their normal procedures. They can't send people out to do a survey, they can't complete their know your customer checks because they're still quite old fashioned and they like to do it in person. So all those things are the sorts of challenges I think that people have been facing. Vidya, can we have the next one? So what's going to be really important? So I know Louise and I keep saying this, but cash, and I'm not going to say it, Louise, but cash availability is the key thing that has to be focused on. The weekly forecast needs to be updated every day. Things change by the hour. So if you keep on focusing on that cash flow, you're not going to lose control, hopefully. I also think this is a very good time to look at the information that you do use to run your business. So is it the information that you really need? And that might sound a bit ridiculous, but I think people who've had a business for a long time, and quite often if it's an entrepreneur who doesn't have a big backup of a great finance team, he just has a few people who help him out and he does most of it himself. What information is he getting? And is it what he really needs? So I think it's also a really good time to help clients think about what are the most important drivers in your business? Are you monitoring them properly? And are you actually feeding that information down to the people who can make a difference to that information? So I believe that's quite important. Oh, another thing I was going to say was, if you found, I had a few clients who were saying that actually they couldn't get the money in from their customers because their sales ledger was in such a mess that they didn't really know who owed them any money. So maybe it's a good idea to put some controls in place now that might mean that doesn't happen again, and that your sales ledger does actually reflect who does owe you some money, not who you think owes you some money. If the person who's watching that relates to, I apologise. The other thing, of course, is people have been reviewing their overheads, and we found one where there were actually more mobile phone contracts than staff. So all these sorts of things I think might be small things, but could actually in the end lead to a more lean, profitable business. I think the other thing that's going to be really important, as Louise said, going forward, is communication. We need to understand from our suppliers how quickly we can get things. Does that impact on how quickly we can then service our customers? We need to tell our customers so that it doesn't impact their business. And if we all work together, and I think that's the main thing, is to communicate and make sure we're focused on cash. Vidya? So finally, just a couple of examples of the sorts of things I've been seeing. So as Louise said, there are some businesses, I think I read somewhere that it's 25% of businesses in the UK who've just come to a complete halt. So I had one client who I've been dealing with for several years. We've done all sorts of things with them over that time. They've grown to £1 million a week of turnover, which unfortunately, because they're a service business, has reduced to zero. They do have an extremely competent and experienced finance team in there who really know that business. They have great forecasts. They've reforecast. They have 3 different versions of each of the forecast now for what they think might happen. But they have very low margins and they have a lot of debt in that business. Now, the shareholders are reaching the kind of time of their life when they'd like to think about retiring. So they did think they would have paid all that debt off within 3 years. Just to bridge this 3-month gap, they think will cost them £1 million, which will probably add on another 3 years to how quickly they can pay off that debt. So we're having a lot of discussion with them about what's the best thing to do now and trying to put together some options for them, which I'm working on with one of our advisory team in the restructuring department. The second example I just wanted to run through was something that's come, this is where we're not actually helping the client themselves, but we're helping one of our referrer accountants who, they're a great accountant, they're really good at it, they've got a lovely relationship, they know their client really well, they look after them spectacularly, but they don't have the experience to maybe help them in this situation. So we're working with the accountant to help them. We can talk to Funding Circle, who we know well, who the directors have got personal guarantees with. We can help them, you know, flex their forecasts and stuff like that. So it's not just the clients we're helping directly, but we're also helping the clients' advisors. And then just on a bright note, since I wrote this yesterday, I took a call last night from a 9 million turnover business, still making 1.5 million EBITDA, actually not affected by this, but the shareholders have changed their expectations now. They've realised that perhaps there's things that are more important in life, maybe got a bit less greedy. And so there could be a chance there for the management to buy that business out at a sensible price. So that, I think that's enough from me. So if I hand over to Paul now, so if anyone's got any questions.
Thanks, Philippa. Thank you, Louise. Lots of questions in and a whole variety of subjects. And let me try and bundle some of these together and cover them off as best I can. For any questions that we don't cover, I have a commitment from the team that we will try and get answers to you as we know where each of these questions has come from. But Louise, there's always this tension in respect of directors' duties and wrongful trading, and ever so present now, in the sense that directors will always try and squeeze as much as they can in an effort to keep their business going. How do you manage that tension? At what point do directors know they've overstepped the mark?
It's a very good question. I think well, what have I experienced? And this is probably no different now to many boards that I've dealt with over many years. It's not unheard of to have a split board in terms of their reaction to certain events. Quite classically, you will find the FD is the very prudent member of the board, recognises and understands the issue with the cash and recognises the consequences of income falling, and can sort of see that on the horizon quite quickly. You'll tend to find that those within the business that perhaps were, maybe it's the managing director or the founder member of the business, that are always looking at expanding and developing and got one eye on growth and sort of see the bigger picture and see beyond, and sort of can't wait to get to the other side of things, and everything will be fine. There is a degree of burying your head in the sand, I suppose, for some who simply don't want to hear it. But I think what's been quite evident of late is not only are, most of the businesses that I'm speaking to at the moment were the fundamentally sound businesses, and they've never really had a problem of this nature in terms of cash and income and the problem that it's causing them. So they were going great guns and they were really fit and fantastic businesses before this happened. So the shock of the impact on their business is quite significant, and obviously that is then resonating around them on a personal level if they've got personal guarantees, so they're suddenly feeling a risk of exposure on a personal level. They in some cases are not even physically sat within the business. They are maybe at home, maybe looking after friends and family that are unwell, or self-isolating or whatever. So I think the shock of just being in this situation is very difficult for them. And yes, of course, we're going to be sort of doing, to a degree, not sort of trotting out the standard words, but of course we are talking about directors' duties and we are talking about the issues that they're facing. And I think initially that message is just not necessarily getting through because they're trying to deal with everything else. So I think you're having to repeat that thought process. But what tends to get the message home is, and I'm going to say it again, Philippa, cash. Having somebody that's struggling, the directors that are struggling to see that the reality of the situation, if they're presented with that cash flow that clearly shows you are going to run out of money tomorrow, what are you going to do about it? And how do you keep trading beyond that? And exploring with them the potential consequences and a lot of what if in the event of an administration or in the event of a formal insolvency, what does an office holder have to do, and explaining those things to them. It does get through. They are sort of responding to those situations and dealing with it and taking the advice and addressing it properly and sensibly. But we're just finding, or certainly my recent experience is, you've just got to allow people to absorb the shock of what's happened. We all know what wrongful trading and the rules around it and all the advice that we want to give to people, but they need to be open and receptive to hearing to it. It is a challenge for them. They do need to understand what it means. I had the instant reaction I had when I first started talking about wrongful trading was, the rules have been relaxed, it doesn't matter anymore. We can do what we like. And we know that's not the case.
That's going to get a bit clearer once the Colicchio's piece comes out too.
Yeah.
That in itself is a minefield. Let me just open the next one to both of you, if I may, because we yesterday talking to a business in the hospitality trade who thinks he'll probably get to open June, July-ish. Most of his season is gone. 2-meter rule is still going to apply, therefore reducing his occupancy by 50%. And he thinks that probably only 20% of his customers are either going to be away from shielding or have the courage to come out. There's a perception out there that actually the recovery is going to be much worse than going into it. You're going to have furloughed staff coming back in, you've got creditor pressure coming back in, you've got bank loans, you've got mortgages, you've got landlords, you've got all of that sort of stuff. What's our collective advice about how you face into that point when the lights start to come back on again?
I mean, Philippa, I don't know if you want to go first.
Well, I was just going to say the same thing that we've said about 100 times already, that you really need to have the cash forecast that's based on realistic assumptions. That's what I was going to say.
Yeah. And I guess this is to us, to a degree. I know this sounds a little bit simplistic, but we're very familiar with sensitizing cash flows and applying scenarios to them, and sort of, what if this happens, what if that happens? And we find it totally normal to look at 3 different sets of forecasts covering different scenarios. And it might sound a little bit geeky and a little bit techie to many people, but that's what they need. And we've talked amongst ourselves previously, you know, I think you're right, that the bigger challenge, I mean, those that can survive this period, whatever period it is, coming out of it is going to be just as hard as it is just hanging in there for the time being. And we are looking at situations, how do you scale that business back up? Can you scale that business back up? We're probably going to find, although we haven't heard it yet, that furlough is just going to come to an end potentially at some point in time. And you might suddenly find yourselves, well, actually, I've been managing my cash flow, but all of a sudden I've now got 100% of that cost back in it. And if you haven't thought about that, and if you haven't tried to forecast in that way, it's going to blindside some people. And we've sort of aligned that very much to the thinking behind a startup business. You won't start with 300 employees. You might start with 30 and build from there. So how are you going to deal with that reality when it happens? And so being fit for recovery out of this is going to be really important.
I guess the other side of that too is the whole supply chain piece, because you know, if supply chains require components to come in from overseas, you're relying on the recovery of other countries and the pace of that recovery to be able to feed the supply chain. And you may have an order book which is 100% full, but you can't actually fulfill it or the cash to fulfill it. So let's just touch on something which is quite topical on the question side, which is the light administration process. Is this really something new? Are we actually just dressing up a trading administration? Are we going to see lots of light touch administrations in July, August period as companies potentially crash through and have to recover?
I guess that's one to me, isn't it? I can't drop Philippa in that one. I don't know. I've given it a lot of thought, and this word has been, you know, it's sort of flashed around in conversation, and you know, there's many out there holding it up to be the magic wand to solve all of the problems. I guess as part of our profession, what are we used to? Yes, we're used to administrations. We're used to what do we normally or typically see as an administration. And I can probably say hand on heart, I've only ever carried out one administration that was a true rescue of the business in the way that it's intended to be. As sort of the first purpose of administration, which is a rescue. What have many been? Many have been a trading and potentially a sale of the business, or in some cases, a slow and gradual wind down of that business. But I have gone through that experience of a rescue and restoring the business back to the directors. We know that these tools exist. We know we have the ability to hand over control in certain situations. You can do it in administration, you can even do it in liquidation in certain circumstances. So we know there's that flexibility. I'm sure plenty have seen the protocol that's been circulating around as well, that's in place, and there's a lot of commentary around it. What does it ultimately boil down to? It boils down to the control and the judgment, and the debate between the administrator and the directors that you're giving that control to, and what you can do. And it's going to be a judgment call on how far you feel you can go to allow them to trade, and what risk is there to you as an office holder if things go wrong. We haven't yet got to a situation where I haven't yet got to a situation where we're seriously contemplating that as the next step. A lot of where we're at the moment is that sort of holding pattern, but I can see those questions are going to come quickly in the next probably few weeks, I suspect, rather than anything else. And yes, we'll be watching and seeing what others are doing.
Yeah, that's interesting, because that brings me on to the next point. There's a lot of interest out there about what we're actually seeing as a firm. What are we actually doing at the firm? And I guess when you move into a crisis like this, typically what you will see is you will see some failures and potentially irrecoverable companies because they were weak going into it, or potentially fatally damaged going into this process. Now that is starting to wash through, what are we seeing now? What's our typical touch point in companies? Is it about advice and restructuring for survival? Or are we seeing a significant ramp up in the insolvencies and liquidations?
I think we're seeing a bit of both, to be honest. I know and I hear a lot that there's this sort of assumption that businesses that were on the verge of failure are just going to use this period as a way of delaying and avoiding having to do anything. So some people are kicking the can down the road, and we may see a flurry of activity. I'd say for the most part, there's an awful lot of businesses who are simply just trying to survive the period. They're not quite at the point where they are throwing in the towel, let's say. I'm not seeing necessarily a rush from that side of things for people wanting to use a process. I think as time goes on, however, there is this degree of concern over the actions that others may take that will force you to make a decision. And perhaps this is where we'll come back to the light administration, but there is a lot of, I think once they've got themselves in control and they know where they are with the cash and they can predict what funding they need and how long they're going to survive, naturally you then look to what other things are out there that are going to cause this to go wrong. And it is the reaction and the response of suppliers and other creditors taking action against the business. And I suppose in some sense I would say, well, if that's where your communication plan and talking to your key stakeholders is going to be vital to keeping them on board and ensuring they don't take action that is unnecessary, that's going to force your hand to do something. I mean, there's one client that I've had which, you know, that they're getting threat of a winding up petition, and should that happen and should that business fail, the party that's trying to recover money will get nothing. Because, you know, the stock in the business simply can't be, that's the main value is stock. It won't be sold. What you'll get for it is very, very little. And I suppose it's articulating the outcome to that party to make them understand actually not doing anything right now might be the right thing.
There's an ethical point coming out too, which is quite interesting, and that's how companies behave in respect of dividends and CBIL applications. So there's a point raised here, and I certainly have seen this in the last week, where a company has been rejected a number of times because the directors have tried to apply under a variety of subsidiary company names for a CBIL, but they are carrying about £300,000 in cash on the balance sheet. And funnily enough, the loans have been rejected. And there's a second question coming out of that, which says, should companies actually be thinking about paying dividends at this stage? I guess our view is, no, we shouldn't, and no, we shouldn't.
I think that's right.
Yeah. I mean, I guess none of us have a crystal ball, do we? So we really don't know the mid to longer term implications of what's happening right now. People are literally dealing with the day to day, and as much as they can trying to look forward for as long as they can, but we generally don't know the implications of it. And I suppose making decisions of that nature, particularly in relation to dividends, and having to justify what you're doing and feeling fairly confident that 6 months or 12 months or however down the line, would you look back and think maybe it was a bad idea to do it. So I think it's challenging for anybody to be looking at that at the moment. And we do know that with the CBILS applications, I'm sure Philippa will say the same, there are businesses making multiple applications and tweaking the numbers and just trying to see what numbers work, frankly, just to see what they can get. So we know that's happening as well. And part of what we're trying to do is understand the process and help business to sort of make those applications. And if they're going to be unsuccessful, what do they do instead?
Yeah, just another one, Louise, which has come up, and there are more entries on this. The issue of Twopiece. So company A ceases trading, company B is formed, it picks up the customers, but there's no 2P between A and B. is there a period of time before company B should start trading to avoid a 2P claim? Sounds like dangerous territory to me.
I was going to say, are you saying that this is a business that's already entered into a process, or is
Yes.
this just in an, right, okay. I certainly don't want to start talking about TP and the legal consequences of TP. I mean, I think it's very difficult to contract out of TP. We know that that's not something that you can do. I certainly wouldn't be confident entering into a transaction with the hope of delaying for as long as possible and keeping my fingers crossed that TP didn't apply. I don't think that's something that I'd be contemplating.
Right, right. As we draw to a close, so I'm conscious of time, and we did say we would take an hour on this. Can I ask each of you, please, if you were asked independently to give 3 pieces of significant advice to any company, but let's focus it on SMEs, because let's face it, SMEs form the backbone of our economy. What advice would you give? 3 pieces of advice from each of you.
Go ahead.
Can I go first?
Yeah.
I'll go with the one that we all know what we're going to say. Have a cash forecast, please. The second one is have a plan, and I think the third one is communicate. Yeah. That's mine. Louise?
I'd agree with those. I would agree with all those things. I suppose naturally I'm going to say consider where you need to take professional advice and what advice you need. Listen to that advice and sort of work with your advisors to find the way forward. I think a lot of businesses are fearful of picking up the phone and talking to their lenders or talking to anybody that suppliers in the business or anybody that they owe money. So communication, as Philippa said, is vitally important. And yes, the planning. I mean, none of this is easy. None of this is predictable. Be prepared that your plan A becomes plan B, C, D, whatever. And try to continue to work through it in a logical way. It is challenging, it is exhausting. We're doing this, you know, as human beings, we like to sit the other side of the table and talk to people. It's quite unnatural to have what is a very difficult conversation remotely with people. So whilst we are struggling to adapt to the new world of communicating, we can't forget how important it is to have that very open and honest dialogue.
And just to finish off on that, are we seeing a sensitivity with banks? Are they being sensitive to the fact, banks, landlords, major suppliers, are they being sensitive and understanding to companies to say, we appreciate you're in difficulty and, you know, we're not going to foreclose on you or issue a writ?
I'd say not all are. We are seeing a range of reactions. Some are taking an extremely aggressive approach, which may suggest in turn that they themselves are struggling and finding it difficult, and therefore they are taking very quick and decisive action that's best for their business. And seeing it from their side of things rather than seeing it in the wider picture. So no, not everybody is taking that approach and understanding it in that way, and that makes it incredibly difficult to react to, particularly if you have somebody of a mindset that they are in pure defensive mode and they are just going to progress down that route as far as it takes them.
Absolutely. Okay, let's draw to a close. Thank you, Louise. Thank you, Philippa. Really, really useful and insightful stuff there. Lots more questions which we will have to respond to, and I know that we will go through a process of doing that to each of the people who have submitted. To our panelists, thank you very much indeed. To our attendees, a huge number of people, vast number of people out there, thank you for the time that you have spent with us this morning. I really hope it's been useful for you. If, as I said earlier, it's not formal advice what you've heard here today, but if you are looking for formal advice, Quantuma.com is a great source of information. Secondly, go to the contacts page, reach out to our directors and partners right across the country, and if we don't know the answer, then surely somebody will. So look out for social media postings for next week's webinar, which will be at 9:30 next Friday. I've covered the subject already with you, and that is Friday the 24th. Registration details are available on the screen. Gavin Pearson, Rob Parry, Jonathan Thornton will guide you through the process of valuing your business. I know I've had some questions this morning about business valuations. I've intentionally deferred them to next week because actually that's the group who are at the forefront of doing that. So from us, thank you very much indeed. Have a lovely weekend. Stay safe, and Quantuma.com is the source of all information. Thanks very much indeed.